The former chairman of HSBC, David Eldon, is also an honorary advisor to the Asian Financial Forum 2010 here in Hong Kong, and he's giving us the benefit of his advice as a banker over many years. And thanks very much indeed for joining us, David.
Great pleasure.
Really looking at, I suppose, the world of bankers, bankers would rather be, I think, in Asia than they would in, say, Europe or the United States.
I think it's something that actually has been going on for quite some time. What has happened with the financial crisis, that it's perhaps speeded that process up. Something that was going to happen, and now it's happening even more.
Back in 2009, you said, and I think I quote correctly, that the United States had not come to grips with the realities of the credit crunch. Now, what do you say today?
I think they've perhaps come to grips with the reality of it, but I'm not sure that it's actually been dealt with yet. As the recent figures that have come out, I mean, unemployment, which even 12 months ago was looking reasonably under control, unemployment's now hit 10%. The stimulus package, the thing that was supposed to create new jobs, hasn't done so. And I think that 2010 for them is going to be a challenging year.
And looking ahead for the American economy, what do you see? I mean, is it basically going to be looking at inflation particularly?
Yes, ultimately that's going to happen. And I think people have been so concentrated on trying to, if you like, solve the problems by throwing money at it so that we don't end up in a disaster scenario, that they will ultimately come back and give us a little bite on the backside, perhaps, through inflation.
So I've got to put it to you that China is the driver of the Asian economy, but how do you see China performing, and what are the challenges that the Chinese economy faces into the future?
China's been very interesting during the whole course of all of this. When the financial crisis first hit, if you like, China responded very quickly. They immediately announced a package of measures designed to keep the economy going. What the government then did was they then really empowered the banks and said, the lending and the stimulus for the economy is going to come through you. So the government isn't going to give out things directly. You're going to be basically in charge of the money that we're giving out, so lend more money into the economy. That happened. It happened fairly successfully. It happened rather quickly, to the extent that by September of this year, the government was saying, wait a minute, let's just hold back on the reins a little bit because you've lent an awful lot. And I think there were concerns in the marketplace that maybe some of that money wasn't going to be used in the right way. The banks were doing their best to get it out into the market. What's happened in China, I think, is that they've managed to avert a problem for themselves. They have switched a lot of their manufacturing that was for export into manufacturing now for the domestic market. So factories that you might have expected to have gone under have probably reduced their output. They have reduced their import content, so they're not so reliable on the amount of imports that they bring in. And they've retooled themselves for delivery into the domestic economy. Growth in the domestic Chinese market is something that most people have been saying has got to happen for the last 5 or 10 years. That is now beginning to happen. So a lot of positives, if you like, have come from China and doing things in the way that they've done them.
So in a way, I guess this conversation has come full circle in that I guess bankers are now looking towards China as the place that they're going to see growth and new business.
Interesting question, because I think when the Chinese market started to open up, and if you take, for example, the signing of the WTO as the starting point when they opened up the financial market, so the end of 2001, the establishment then of the China Banking Regulatory Commission in 2003, and a general opening up to foreign banks into the market, you, I think, got what you expected. There were a lot of banks that came across and wanted to do business. But not all of them have found it quite as easy, first of all, as they thought that they would, partly because they came without their eyes wide open, maybe. But the thing's gone full circle now, because what has happened now is that one of the reasons that China opened up at the time was to leverage on, if you like, Western banks' expertise in various areas, which would have included things like asset and liability management, would have included things like credit. given what has happened in the West, the regulators in China are now saying, well, wait a minute, we thought we had let you in to help us. Is there anything that we can do to help you? Because we're not sure that you've got the right bottle.
So how do you see the dynamics of the banking business actually working out?
What I do see is this. I think that China remains an attractive market for financial institutions to invest in over the longer term. I think the financial institutions that A, want to come, and B, can persuade the regulators in China that they are appropriate partners to enter into the China market or to locally incorporate and go in on their own, is going to be done at a much higher level than it was in the past. They are going to be more selective, but I don't think I've spoken to anybody yet who has said, because of the financial crisis, because of the impacts in Asia, because of what people are seeing generally in the world, that China now is not going to become an important economy. Nobody says that. Everybody still says, it'll take time, China is going to be the place to be. And those financial institutions from outside the region who want to consider their future growth, their place where they think that they're really going to do some business in the future, are going to have to continue to look at entering into the Chinese market.
And if China is the place to do business, is it going to be through Hong Kong, do you think?
I think I think there is a degree of complementarity between them all, if for no other reasons than time zones. Whether or not people want to do their China business through here exclusively, I doubt. I think, again, there is a case for those banks that have been operating here successfully for many years to also do their business in China. But those who haven't had any operations here or nothing significant here will quite likely go directly into China.
And turning to Hong Kong and the Asian Financial Forum 2010, you're an honorary advisor. Do you think this is the place to have that kind of a dialogue between the big financial centres?
It's done well. I think the concept when it first came out, everybody always gets skeptical about these things and say, what, another forum? But I think as this one has developed, people have they've recognized the value of the forum, and the quality of the people who come and speak at the forum has, I think, got better and better each year. And it's becoming a really important milestone now, I think, in people's calendars. They know towards the end of January every year there's going to be something important going on in Hong Kong. You can't ignore the fact that China is in the doorstep as well. So people say, okay, beginning of the year, let's go and see what's happening in Hong Kong. We can go into China from there if we want to do so because it's nearby. So it makes a good, it's a good stopping or a good starting point to the year, I think.
David, thanks very much indeed for joining us today. And David is the honorary advisor to the Asian Financial Forum 2010 in Hong Kong.